Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Asian session live market analysis for the week 30th July to 3rd August. So this is a crucial week wherein July gets over on 31st, that is tomorrow, and August starts by Wednesday until Friday, 3rd of August. The market is expected to make very volatile moves. So today is 30th July between 5 and 5:45 GMT. I'll just review the forecast what I have given earlier, and also I'll try to give the forecast for this week and for the month of August. Now, I'll give more importance to that of forecast today because I'll be away for some time, so I may not be able to take the webinars on a weekly basis. So I intend to give the forecast for this week and also the weeks of August. Now anyhow, for the market reading, we know that we make a note of the initial lows and the highs around 3:30 GMT in 4 majors and 2 commodity pairs, and try to identify the type of moves the players make in the market during different sessions of the day, Japanese, European and US sessions, and try to identify what could be the sequence of the market moves and accordingly take trading decisions. In that process of trading decision, we always try to see that limiting the risk is the prime importance. So as soon as we enter into the market, either a buy or a sell, we try to keep 30 pips hedging order to limit the risk to 30 pips. And once the position makes profit, we try to keep stop at entry, so that the entry stop or the hedging is acting as a risk limiting factor. So once the position makes profit, if we keep stop at entry in the entry level, so we don't incur any risk in that particular trade, then we can try to maximize the profit using the trailing stop. Thereby, we always see that we don't take unlimited risk, whereas we use the trailing stop and maximize the profit. So minimize the risk and maximize the profit is our objective, irrespective of the forecast or the market reading we try to do. So as far as the market reading is concerned, we note down around 3:30 GMT the initial lows and the highs in the 4 majors and 2 commodity pairs. And today you come across, in the case of Euro, 1.2284 is the initial low and 1.2311 is the high. You will be able to see this in the live market quote page. I have given the link for the same. You can open it in a browser and try to see the current levels are unaltered, the high and the low in the live market quote page. So that means they are not breached either the low or the high in the case of Euro. And in the case of GBP, 1.5712 is the low, 1.5750 is the high. They are not breached it. And USD 78.36 is the low, and currently market is staying near that, and 78.54 is the high, and that is also not breached. Then in the case of CHF, 97.56 is the low, 97.78 is the high, that is also not breached. And Canadian dollar, 1.0035 is the low, 1.0051 is the high. So you can see in all the currencies the spread is very narrow. And also in the case of Australian dollar, 1.0450 is the low, 1.083 is the high. So from 3:30 GMT, after setting the initial lows and the highs, they are not breached either the low or the high, indicating that they are keeping almost closer to low or at the middle level in some pairs and the higher level, but they are just making consolidations. So After doing the consolidation, we have to find out whether they breach the high or breach the low. In case if they breach the low, then we watch for about 30 minutes, and if they don't breach for the new low formed and try to come above that of the initial low in less than 30 minutes, we understand that was a stop point. So when they make a downward stop point, they are sure to make an upward move. Then after going to that of the high, we have to watch whether they are doing an upward stop point or an upward rise. So upward stop point means it will be a move above that of the initial high for less than 30 minutes. Then afterwards it will come below that of the initial high in less than 30 minutes. Then they may swing down to that of the low. So they always make a downward stop point, then swing up to that of the high and make an upward stop point. That is part of the game. But after breaching the high, whether they continue to rise or hold above the initial high for more than 30 minutes, that is up to 2 hours, then we call it as an extended move. If they continue to breach the new high beyond 2 hours, then we identify it as an intentional move. And for 2 sessions and the start of the 3rd session, they are expected to make the rise. So that is how they had done it on Monday and Tuesday, that is breaching the high, Thursday and Friday of last week. Then before that, we know that they came down in the case of euro to 1.204543 level, and we know that last week they just made the week beginning false move of a drop, and Tuesday they made the either way stop and upward stop and followed by that of the downward stop. And again they showed 1.2043 as the new low. Then from there they started gaining using some SQs, and the same excuses they have just made opposite moves earlier occasions also. So it is a question of only using the trigger time to make either an upward move or the downward move, and they can give any sort of interpretations for such act or the events. So it is not necessarily always they have to make the move similar to that of what they have done earlier. So the speech is used as the trigger, and for that they gained nearly about 200 pips in the case of euro. And is it going to stop with that? They are expected to make further rise, and you know that on Friday they went up to 1.2390 in the case of euro, and then made the drop to 1.23 and came down below, and they are expected to reach again that 1.2390 comfortably, and that is what expected now. Then in the case of GBP, when euro was gaining on Friday, they are not gaining in the case of GBP, mainly to gain the levels in the cross euro GBP, and now they are expected to make the slide in the case of euro GBP. So they handle the majors, commodity pairs and the crosses during different time frames of the day, so that every pair is making the moves during the day. So we have to identify what pair they are focusing and try to find out which pair is breaching the new low, breaching the initial low or the initial high, and then try to find out what we could derive out of that. Then later on we can find out the time taken to stay below that of the low, time taken to stay above that of the high, to find out what is the sequence of move they intend to make. So you find invariably they make the intentional move alternate with that of the extended move. So extended move is for 2 hours and intentional move is for 2 sessions and the start of the 3rd session. And in between these 2 moves, they make stop-ins during session start time, gap time false move, and also swings during that of the mid sessions. Thereby, they are able to handle the crosses. During major moves, either extended or the intentional move, if you notice it, they will be making big moves in the case of majors, but subdued moves in the case of crosses. Why? Because when they make in the majors and the commodity pairs, either the USD gaining move or the USD weakening move, the crosses are expected to make subdued moves because the quantum of move in the numerator and the denominator currencies could be almost similar. As a result, unchanged conditions could be seen in the case of the cross. During mid-sessions, they hold one currency and rise or drop another currency. That sort of moves they make it. And you know that GBP is the sentiment creator. So they will try to make big moves in the case of GBP, either on the downside or on the upside, to create the fear in the market once the traders have committed positions. So they have trapped the last week. After Wednesday, anybody has taken the sell positions, they have simply trapped them and induced them to do the short covering. So now they are kept below that of the psychological level in the case of euro, 1.23, indicating that they pretend as if the market is going to drop, and then the traders will try to take sell and buy trade when they breach the supports and things like that. Then later on, the players are expected to trap them again. So alternatively, they trap the short sellers under the long holders. So in any given market, if the condition is bullish, it doesn't mean those who are doing buy and sell trades are expected to make profit. So where exactly you enter and how you are using the trading strategy to retain the profit, these are all the conditions which determine whether you are going to be in profit. Similarly, in a bearish market, not all the traders doing sell and buy trade can make profit, because invariably the traders find after the drop a sell opportunity when they breach the supports and go below in the low. Then the traders think that, okay, we can do a sell and buy trade because it has gone below that of the support. So they pretend as if it has breached the support and the euro does not have the strength to go up and things like that. And later on, when the traders sell heavily there, the players buy all those things and rise it. And when it goes above that of the resistance and stay above that of the resistance, the traders think that we can do easily a breakout trade of a buy above that of the high, and definitely a rise is expected, but they don't make much rise and start making the drop. So we have to understand the cunningness of the players and then use all our technicals and fundamental analysis. If you fail to use the common sense and only focus on that of the analysis, then invariably will continue to come across surprises. Now, I'll come to that of the live market code page and explain to you what is happening now. In the case of euro, it is currently okay. I focus the camera over that of the live market code page. So currently euro is trading around 1.2287. 1.2284 is the initial low. They are not breached it, even though it is closer to that. And 33 pips negative net change is seen. And in the case of yen, 11 pips negative net change is seen. It is a contrarian move. When the numerator is making negative net change, the denominator is also making negative net change. And USD yen is staying around 78.35, 37, 78.36 is the low. So you can understand that they made a nominal dip of 11 pips. Still, it is a contrarian move. Whenever there is a contrarian move, you can understand that they are not expected to make a big drop or a big rise when they make such contrarian moves. Then in the case of GBP, current level is 1.572022 and 1.5712 is the low, 1.5750 is the high. 25 pips negative net change is seen. So when compared with the euro, GBP is making less negative net change. It is just a small dip. They had done it during that of the Japanese session as an extended move, and they are expected to make the intentional move of gaining the levels afterwards. Then in the case of USD CHF, 97.56 is the low and 22 pips positive net change is seen. 97.78 is the high. They are closer to that of the high now. And when euro has made about 33 pips negative net change, CHF is making 22 pips positive net change, lesser negative positive net change. As a result, euro CHF is just staying around with no change conditions. And euro GBP started making 6 pips negative net change, And you know that on Friday they gained the levels in the case of Euro GBP to 78.50 area, and they are expected to come again below that of 78. And so a contrarian move is seen among that of the Euro, USD Yen and GBP. Then coming to that of the denominator currencies, USD CHF is making 21 pips positive net change, and Canadian dollar is making only 13 pips positive net change, when Australian dollar is making about 20 pips negative net change. So here you find in the case of commodity pairs, they are making the USD gaining moves. Canadian dollar is making, USD CAD is making 13 pips positive net change. Australian dollar is making 20 pips negative net change. So that is the USD gaining move. And also Euro and GBP are making USD gaining move. USD CHF and USD CAD are also making USD gaining move, excepting USD Yen. As a result, the Yen crosses are making a dip, and later on they are expected to gain the levels. And as far as the commodity pairs are concerned, as I explained many times, that they lead the rally and lag behind. And on Friday, you would have noticed that Euro gained about 150 and odd pips, but Australian dollar gained only about 89 pips. So you find that GBP and Euro could gain more, and Australian dollar is expected to make a consolidation around that 1.04 to 1.05 area for some more time, and it will facilitate Euro and GBP to gain more levels, but it may not gain similar quantum of moves on the pips move on the upside. Then I'll come to that of the PowerPoint presentation. Now, expected market moves for today and for the week. So as I explained that it is a month end time, 30th of July, and tomorrow is 31st of July. So they are expected to make very quick gaining moves in the case of Euro and GBP. I'm referring to that of the numerator currencies, Euro and GBP, and somewhat gain in the case of Australian dollar. Then swing and firm up moves are expected during that of the Japanese session, and a quick rise is expected during that of the early European session. They are expected to make higher level swings, and then small swings and pretend as if they are going to drop or dip during US session and firm up during that of the US session. And tomorrow we could come across more visible gains in the case of Euro and GBP after making USD gaining move during early Japanese session. They are expected with regard to the net changes. So net changes will be negative to start with, and later on they are expected to gain the levels from that of the late Japanese session. So tomorrow, late Japanese session itself, they are expected to gain quickly and rise again during that of the European session, and then make further rise during US session, and towards close they are expected to make the profit booking move. That is on month end time, 31st of July. Then on 1st of August, they are expected to open flat during Japanese session and then make a little bit of dip, and European session subdued moves, and US session they are expected to make the firming up move or a rise. First and second they are expected to make more of a sideways move, and when BOE and ECB make the interest rate announcement and the asset purchase facilities and things like that, they are expected to make the nominal gain in Euro and GBP before the announcement. After the announcement, they are expected to make the slide. Then Friday, before the non-farm payroll announcement itself, they are expected to quickly gain during that of the Japanese session and make nominal dip before that of the non-farm payroll release, and an upward spike is expected on 3rd of August, Friday, after the non-farm payroll. So then afterwards you will be able to come across the trend is on the upside. Then 6th, you know that it is a week beginning, 6th of August. So they are expected to make a week beginning false move during that of the late European and early US sessions, and afterwards they are expected to gain the levels. Then in the month of August, you could come across on Mondays, week beginning false move on the downside, followed by that of the gaining moves from Tuesday, Wednesday, and also Thursday and Friday. Sometimes the moves might be sideways, and later on Thursday and Friday they are expected to make further gaining moves. So in a week normally they make week beginning false move from second week of August, then followed by the week beginning false move of a sideways or a little bit drop. Then Tuesdays they make either way stop ends nowadays, not Wednesday midweek. Instead either way stop ends are made. That is, either they make the upward stop end to start with, and then later on downward stop end, then continue to make sideways move, and then next day onwards, Thursday and Friday, they are expected to rise. Instead, in coming month, they are expected to make Tuesday either way stop ends on the upside and the downside. Then Wednesday onwards, for 3 days, they are expected to make the upward move, because they are trying to take more time making upward move. Before that, they are just absorbing all the cells. So for that, they are making this sort of moves. They pretend as if they are going to drop 1 or 2 days and then try to accumulate the cells from that of the technical traders, and later on gain the levels, induce them to do the short covering by gaining levels on Wednesday, Thursday and Friday. So whole of August, there could be much more gaining moves seen. And in the month of September, you will come across more visible gaining moves happening in the market. And so I'll not be able to give the webinars till end of September or early October. So I will try to post all the expected market moves when time permits in the blog, my blog, iknowindices/blog, and there you can find out, because I am just going to Europe on some assignment, so I'll not be having time to give the webinars, but at the same time I will try to squeeze in and see that I give the market reading in the blog. And if you ask any questions through email when time permits, I will definitely reply to those emails. Let me minimize the PowerPoint presentation. I'll try to answer to that of the questions which are asked here. Francisco has got a question. I opened sell on Australian dollar at 1.0485 on Friday. Do you think I can use a stop at entry and try to take profit around or below 1.04 figure? Now, if you see that they formed the low in the case of Australian dollar 1.0450 and 1.0483 is the high, you better keep stop at entry, currently trading around 1.0461, and they may breach the low briefly. At that time, if you are not stopped out at entry, try to book profit, because Australian dollar, they are expected to consolidate in this particular area of 1.04 to 1.05, and so you have to handle it accordingly. Then Jack has got a question. Okay, what is the average daily and weekly range of euro and GBP? See, euro is expected to make about 150 pips net change, either on the upside or on the downside, and GBP has got a potential to make about 250, but nowadays they are limited to 150 only because of reduced volume. And you can understand easily the reduced volume. You just register for a demo account in any of the forex broker, and they will chase you like anything and offer more and more of benefits. So that shows that the traders are lesser in number when compared to that of the previous months. So that is why they're going for enormous offers, etc. So GBP also they are making only about 150 pips in a day, and the potency for euro in a week is about 350 pips, either on the upside or on the downside from that of the Friday close level. So last Friday, 27th of July, the market close level. From there, they can gain about 350 pips in the case of euro and 600 pips in the case of GBP. There is a potency. Then Caesar. What is expected in gold? And gold is trading currently around 1623, and it is expected to gain up to 1650 on the upside. Then again it will try to come to 1600 level and make swings in this month, and you may not come across very aggressive gains now in this month, in August, even though it is month end time. And then from mid-August and early September onwards, we could come across gold reaching 1800 plus. Then chance. How high is Australian dollar likely to go and when this descent starts? The Australian dollar has got a potency to go up to 1.05, and if more short sellers are there, because the way in which two people have asked about Australian dollar, I think the traders are willing to do sell and buy trades in Australian dollar, as this is the first currency gained significantly when compared to euro and GBP. But you know that they have done similar moves of this nature. If we think that this is the currency which has gained the maximum level, so we can short, they make further gains. And similarly, you know that when gold has gone to 1800, people thought, okay, now it has reached the maximum, we can start doing sell and buy, but they went up to 1910. So always keep in mind, use the hedging order to limit the risk. And the descent could happen only after a prolonged period. Not a big descent is expected in the case of Australian dollar for the time being. And it is expected to lead the rally again and again and lag behind. But not much of a downside is expected. And not parity and things like that. Maybe about 100 pips swing on the upside and the downside are part of the game. But I was telling that when it was around 0.97, it will go to 1.04 and 1.05. But many were telling that it is high time that Australian dollar comes below parity. But Australian dollar, they gained it. Euro and GBP, they have gained nominally. Still a long way to go, but they are expected to accelerate the gaining moves once they absorb the short sellers at every level. Then you will find that on a daily basis, the market is expected to make volatile move and quick gains. They make it in such a way that they drop about 100 pips and hit all the stops and gain within a matter of 30-45 minutes all the levels. That sort of moves they are expected to make it. So be cautious and use the hedging order to limit the risk in such cases. And so no indicator or no mechanism can say that they are going to reverse in a matter of 30 minutes, 40 minutes and things like that. So the quick moves you can identify only with the help of the live market code page and try to grab the buy positions when they breach the low and go below quickly, and then you will be able to see that they rise very fast. And as they rise, you can keep stop at entry and try to trail the stop, and they quickly gain, like Friday, how they gain it up to 1.2390 and dropped to 1.23. So when you use the trailing stop, it will get closed. The position will get closed around 23.75, and then if they drop, you can re-enter again. And so that is the only way we will be able to capture the maximize the profit in the market and take off. What would be good dip to buy euro and GBP? Any dip around that of 22.84, about 20-30 pips maximum they may do, or 10-15 pips also at times they may do. If the short sellers have not covered the shorts, at that time try to buy it. Still use the hedging order so that you are only limiting the risk to 30 pips or even 10 to 15 pips you can keep it. Then Shans. CHF likely to go to parity again. Yeah, it is expected to go to parity this week very quickly. And it went up to 99.65 and came down to 96 and now trading around 97 area. And once it breaches parity, they will straight take it to 1.01 area. That is a normal strategy they do. So because above parity, a lot of people try to take sell position, they quickly gain and the short covering is done, then they go below parity and come up. So try to understand their tricks and do the trades accordingly. Then Jack. In your strategy, you use hedging order if hedge is not available with your strategy. Still be possible? Yeah. If the hedging is not available, the only possibility is wait for a long time, and whenever a good opportunity comes, whenever the momentum is very quick, then enter into the market. Thereby, you can even avoid keeping stop. So always quick moves or false moves in the market. So now 2284 is the low. Okay. They are just hovering around without breaching the low and the high, and definitely they are expected to make a stop before making a rise. So they are simply making consolidation. Don't take any position. Wait for the right opportunity. When they breach the low, you just watch how long they continue to breach the new low, new low, new low. It's about 10 to 15 pips, 20 pips. Afterwards, they stop cutting the new low for 10 minutes and start gaining the level. Then you try to buy. Then use the hedging order in a corresponding cross if needed. If your equity is very limited, then suppose you are taking a buy position in euro and then you try to use a currency wherein euro is a numerator in a cross where euro is a numerator. So euro yen, for example, is a numerator. Euro is a numerator, yen is a denominator instead of US dollar. So you can use a cross wherein similar net changes are seen. So it is about 27 pips, it is about 34 pips. So fine, we can use 30 pips below a sell hedging order. Short sell in the case of euro yen or in the case of euro GBP or euro CHF. Because euro CHF is not making much of a move, then euro Australian dollar you can use it, or euro Canadian dollar you can use it, where euro is the numerator. So wherever you find similar net changes, you can use that particular pair, because when euro drops, and those pairs are also going to be affected, then that will act as a hedging for you if in the absence of hedging facility. Okay, Shams. Means if CHF is going up in euro likely to come down, so don't think that way. Because if you see carefully that euro 27 pips negative net change they have done only 18 pips positive net change in the case of CHF. So it is not always in tandem that they have to make the moves in euro and GBP, euro and USD CHF in the opposite directions. There are so many occasions wherein they have just moved USD CHF upward as well as euro USD upward. And they will tell a isolated story for CHF and in relation to SNB and things like that. And they will continue to gain euro because of US dollar weakness or whatever the other stories. They use the same stories in different language during different time frame. Ultimately, it will trigger either an upward move or a downward move or the contrarian moves. See, like now euro USD yen, they are making contrarian move. When euro is making USD gaining move, USD yen is making USD weakening move. So similarly, they can gain USD CHF as well as gain euro USD. There are so many occasions I have shown it during the webinars itself how both are showing positive net change. And on Friday, you would have noticed that Euro, USD Yen, and GBP, all the three were showing positive net change. It's a contrarian move. Then Leon, are we now in long-term upswing in the Euro, or this just a corrective pullback? No, we are on the upturn, and long-term upside move is expected in the case of Euro and GBP, and also USDN and USD CHF. Also in the case of commodity pairs, USD CAD, Australian dollar is expected to make range-bound swings. We'll miss your webinars. I'm extremely sorry because I have to do other works also, and whenever time permits, I will certainly display it in the blog, and if any important information has to be given, I'll try to post it in the blog or in fxread.net so that I'll be able to share my views with the traders when there is extreme fear in the market. Because I always want to just give the posting when there is an extreme fear in the market in order to cool down the traders and view the market calmly so that they'll be able to take appropriate trading decisions. So my objective is not to say that my forecast has come true or things like that. My objective is to eliminate the uncertainty as much as possible, and also try to motivate the motivate the traders rather than frightening them, telling that Euro can go to 1.19 or it can go to a deeper level and things like that. See, ultimately you take a position and Euro may go to 1.19 or 1.33, but not immediately. So you have to look for immediate trades. So I always try to focus on that so that the trader is not unnecessarily frightened, and once a trader becomes frightened, he makes distressed trades. And when it came down to 1.2050, many said that, see, your forecast has gone wrong, I am going to take the sell. And I was telling them the players are buying, it is very evidential, they forcibly dropped it, and they will use yet another story to gain the levels. And you can avoid buying, but avoid the sell and buy trade. That's what I was suggesting. And later on, people found that how they create the panicness among that of the traders and try to accumulate the positions at the lowest level and create the bullish feel to that of the traders, inducing them to buy after the rise and just simply make them fools. So ultimately, you find that the players are here to fool the traders. So it is up to us to become smart, up to us to understand, because it is a man-made market. One man is trying to fool the other man. So you can get fooled once. If you continue to get fooled, that means something wrong with us. So today's forecast swing and firm up moves during Japanese session, quick rise and higher level swings during European session. Swing and firm up moves are expected during US session. This week, Monday and Tuesday, that is 30th and 31st, they are expected to gain the levels. 1st and 2nd, they are expected to make sideways move with little bit downward stop. Then 3rd of August, they are expected to rise after non-farm payroll. And they are expected to gain significantly during 2nd, 3rd, 4th, 5th weeks of August, and also September. We could come across more upside moves in the case of Euro and GBP and also the denominator currencies. So when Euro is rising, don't short USD CHF. You might be trapped. You know that CHF has been coming from 0.71 all the way upside, and then you find that Euro has not dropped that much, nearly 3,000 pips, whereas CHF has gained. So keep it in mind, they pretend as if it is dropping in tandem with that of euro rise, and later on they gain back the levels and go to further high levels, in the case of denominator currencies. So trade wisely using such strategies and the understanding, and still wait for quick moves in the market and try to enter into the market so that you can even trade without keeping stop. Instead, if you try to be possessive of some positions and try to enter into the market, if you don't have any position, you become restless and things like that. That means you have become addicted to trading. So avoid that. And whenever a good opportunity comes, be an opportunity trader. Whenever a good opportunity comes, like a very quick drop, try to buy. Use a hedging order to limit or a stop. And then you try to keep stop at entry. Once a position makes profit, you try to trail the stop and maximize the profit. During trending time, second, third, and fourth weeks of the month, the moves will be either upward or the downward. And coming months, it's going to be upward. Then you can do position trade. During first week and the last week of the month, a month like this week, week like this week, wherein the month gets over and the new month starts, the market is expected to make volatile moves, then avoid doing position trade. Then try to grab profit and build the equity during such time. And during the second week onwards, you try to take the position, and whenever any position is hedged and you are waiting for the position trade, and at that time you can close the hedging and continue earn money from that of the market. So understand the market timings, then you will be able to understand how a monthly cycle they are doing it, handling the spot market, CFD and futures market, options market, and also the currency trading market, the derivatives and other markets as well. So they have the great responsibility of handling all the markets. So obviously they will do one at a time and try to come to other markets. We have to understand that and then try to focus on wherever the market we are, whenever they are making active moves, do the trades. The rest of the time, be happy with holding the equity. So I take this opportunity to thank FX Street and also you people who have come here to attend my webinar. And I'll come back by early October and I will just intimate FX Street to reschedule my webinars and it will be displayed in FX Street. Then you will be able to continue attending the Asian session live market analysis and also tracking the forex market together webinars. Till such time, whenever time permits, I will try to post it in my blog, iknowindices.com/blog. My email ID, dr@iknowindices.com. And you can send emails when time permits. I will try to reply to those. Definitely I'll reply, but there might be a delay. But if you wait, definitely you will be able to see the reply from me, giving either the forecast or the trading strategies. So thank you one and all. See you. Wish you all good luck in good trading conditions. Thank you.